Every investor says the same thing. We follow the fundamentals. Revenues, margins, guidance. Cute. Meanwhile, the real game is being played from orbit and in the shadows between official reports. Hedge funds count cars and Walmart parking lots from space. Algorithms scrape millions of prices before the sun comes up. Brokers sell the ghost map of a phone's movements like it's weather data. Governments call it innovation. Companies call it competitive intelligence. Most people call it creepy. The markets call it alpha. And in a world drowning in official numbers, the best players hunt for the unofficial ones because they settle the argument long before the press release does. Information has always been money, but alternative data turned that old truth into an arms race. Long before rockets and apps, merchants paid for arrival times. If one ship reached Venice a day earlier than another, its pepper sold first, and price made the difference between profit and loss. Speed was data. Later, analysts learned to obey the mosaic theory, building a picture of a business from shards that were individually harmless and collectively revealing. Supplier checks, parking lot visits, channel calls, shipping logs. Nothing illegal, just obsessive curiosity stitched into an edge. Then the internet taught the world to publish itself. Prices, job openings, reviews, code repositories, ship's beacons, satellite pixels. A pair of binoculars became a fire hose, and the mosaic turned into a high-resolution map. The sky became a camera. Hundreds of satellites stared not at the stars, but back at Earth, and the first joke wrote itself. All that technology just to count cars at Costco. It works. From orbit, a car is a rectangle of contrast. Count enough rectangles at enough stores, factor out rain and holidays, adjust for seasonality, and foot traffic emerges days before an earnings call. When the counts surge, same-store sales often follow. Aerial channel checks replaced clipboards, and the only permission required was physics. Oil traders learned to read shadows. Crude storage tanks with floating roofs cast rings that widen as the tank empties and shrink as it fills. Machine vision measures the darkness, the angle, the circumference. Sum the shadows across a region, and weekly inventories reveal themselves, sometimes more honestly than official figures, released long after the market has moved. A line of darkness becomes a number. The number moves billions. Crops tell stories too. Sensors don't just see green, they measure stress. Vegetation indices track drought, hail damage, and harvest timing. When a field browns too early, yields will disappoint and prices will adjust. Mines whisper from space as well. Piles shrink, tailings grow, and smelters glow in infrared when output changes. Even the night has a pulse. City lights brighten with growth and dim with recession, mapping the fever of an economy when bureaucrats are still hunting for thermometers. Sunlight feels honest. It isn't. Seeing is not the same as understanding. And interpretation is where edges multiply or die. And the camera sees cars, not conversion. It sees lights, not livelihoods. It sees shadows, not the reasons behind them. And when everyone can watch the same pixels, the advantage shifts from eyes to explanation. That's why the other half of this world lives on the ground, where the web whispers and scrapers listen. The web breathes data, prices creep up and down on thousands of product pages in the middle of the night. Job postings appear with words that give away strategy. On-device inference, Latin America expansion, Wave engineer, App Store rankings jump, reviews sour, known issues. Pages get quietly edited at 3 a.m., shipping schedules twitch, customs filings tick up, out of stock until banners flicker across categories that were stable yesterday. Scraping turns these tiny breaths into signals. Mirror enough retail sites and a private inflation index emerges, faster than any official print. If a retailer nudges 10,000 SKUs at 2 in the morning, either costs are rising or elasticity is being tested. Track it broadly and a heartbeat appears. A basket warms here, cools there, and eventually central banks catch up. Follow job postings and the future peeks out. Titles are press releases for people who can read. A sudden taste for RF engineers suggests a product line. A hunger for compliance counsel suggests a regulatory storm. App Store data speaks a dialect of churn and delight. Rankings move. Sentiment curdles around a particular phrase. Funds on hold, can't withdraw, login failure, and the risk that will show up in the next quarter S numbers is already in the comments today. Supply chains betray themselves in breadcrumb form. One obscure component supplier goes quiet. 6 weeks later, 5 brands delay launches. And a canary that sings in JSON has done its job. Even language itself leaks. Natural language models score the tone of earnings calls, flagging rising uncertainty, evasive phrasing, or sudden adoption of risk-coded cliches. Macro headwinds is the market's version of, it's not you, it's me. Addition. Social and search aren't truth, they are velocity. A spike in attention often lands days before the headline that will explain it. Scraping lives on a legal fault line. Terms of service, robots, TXT, public versus private, authorization and access. Courts redraw the map every few years. The rule that keeps the sleep steady is simple and humble. Consent, context, caution. The goal is lawful insight, not clever trespass. Because there is a third layer, the one that turns the stomach, secrets that aren't secrets, the anonymized and aggregated slivers of daily life traded like seasoning. The exhaust economy sells patterns. Card networks create aggregated transaction feeds that show spending tilts long before company reports. It isn't a name, it's a trend across millions of swipes. One chain outperforms peers, the card data often knows first. Location data traces foot traffic as devices ping towers and apps. Aggregated and anonymized are supposed to be the magic words. They do heavy ethical lifting until someone demonstrates how easy re-identification can be in the wrong hands. Receipt parsing services turn emailed confirmations into category signals. SDKs and free apps monetize motion and taps. The defense is familiar, consented, aggregated, privacy safe. The indictment is familiar too, an economy that treats intimacy as an input. Both statements can be true at once. Markets don't ask which is truer, they ask whether the signal works. But signals that were purchased at an ethical discount tend to incur reputational interest. The bill arrives with subpoenas and front-page stories. The story is not one of pure dystopia. The same eyes that front-run earnings can front-run disasters. Satellite crop stress can warn of famine months ahead. Nightlights can map post-earthquake recovery when official reports are silent. Vessel trackers expose sanctions evasion and illegal fishing. Rapid price scrapes catch gouging during shortages. Mobility data helped epidemiologists nowcast pandemic spread when case counts lagged reality. A tool is a force multiplier. Point it at profits or preparedness. Whichever target is chosen appears sharper. Still, edges come with traps. Ground truth shifts. Parking lot counts predicted retail health until e-commerce consumed foot traffic. And empty asphalt didn't mean a weak quarter anymore. Selection bias is everywhere. Datasets are rich, where the wealthy live, and weird where they don't. Train on the wrong neighborhoods in the future looks like a gated community. Backtests seduce, and any dataset can be tortured into a confession. The future has a way of walking into the room with a lawyer. Latency and leakage erode returns. The cleaner a signal, the more people find it. Once consensus adopts it, the alpha is gone and the edge becomes a decorative hobby. Causation theater is the market. S favorite play. A spike in job postings could mean growth or desperate backfilling. A dip in night lights could be a power outage, not a recession. Confuse poetry for physics and the punishment is swift. Compliance sits in the background like gravity. Mixing alt data with material non-public information isn't creative, it's illegal. Teams get hungry and lines blur. The firms that survive build pre-trade firewalls, keep auditable provenance, and prefer missed opportunities to orange jumpsuits. Culture matters. An edge made the wrong way doesn't survive the right question. So how should this world be approached? Start with a hypothesis. If input X moves, output Y should follow. Don't fish for patterns, hunt for causes. Know the sensor. Every dataset is a camera with a dirty lens. Understand what it truly sees, what it misses, where it lies, and how often it needs calibration. Time matters. Is the signal leading by days, coincident, or lagging by weeks? Prophets live in the delta between when a thing happens and when the world admits it happened. Triangulate. One dataset says up, another says flat, a third says seasonal. Believe the choir, not the soloist. Score for ethics. Data has a cost beyond price. If it can't be explained to a regulator and to a skeptical parent without flinching, it is borrowing trouble. Build kill switches. When platforms change policies, when privacy laws tighten, when a source vanishes, an elegant edge can invert overnight. Codify the moment when a dataset no longer means what it used to mean. Measure decay. Every signal degrades as it's discovered. Track hit rates the way P&L is tracked. Retire heroes before they embarrass themselves. And tell the story, not the spreadsheet. The goal isn't data, it's explanation. Why would this be true in the real world? If that answer cannot be delivered in plain language, there is no thesis, only vibes. Look again at the satellites. Parking lot car counts are a proxy for revenue only when behavior is stable. Layer app store reviews and card transaction trends over those counts, and a truer picture emerges. An empty lot paired with spiking digital orders means the camera hasn't kept up. The business might be fine. Oil shadows that swell can be telling a story about inventories or about a port bottleneck. Cross-check with vessel transponders and refinery heat signatures. A dimming city might signal recession or a policy to turn off lights at midnight. Triangulate with freight volumes and hiring trends. The pros don't worship any feed. They assemble a mosaic, test it, and keep asking what could make it lie. On the ground, scraping's ethics evolve with the law. Courts have ruled that publicly accessible data often remains public to read, yet platforms push back with layered defenses and contractual barriers. The doctrine shifts, the principle shouldn't. Seek consent where reasonable, respect context, and accept that some doors should remain closed even if a clever hand can pick the lock. There's a difference between insight and intrusion, even when both are technically possible. The secrets layer will keep forcing uncomfortable questions. Anonymization protects until it doesn't. Aggregation feels safe until some enterprising analyst shows how small a group needs to be before a pattern points to a person. Legislators respond, companies adjust, data brokers rebrand, and the trade continues. The wise assumption is that public tolerance narrows over time and the true cost of cheap signals rises. Reputational risk is a dataset too. Ignore it, and the negative carry compounds. Yet there is no going back to a world of quarterly PDFs and polite guidance. Official numbers are negotiations. They reflect reality with a delay and a spin. Alternative data doesn't end the negotiation. It begins it earlier. In markets where the truth arrives late and money moves early, the decisive edge is a minute hand, not a moral. That's the attraction and the danger. Seeing something first is powerful. Being certain of what that something means is rare. Consider the investor who treats nightlights as gospel. A region dims, the model says contraction. But a new energy policy shut off decorative lighting after midnight while factories hum along. The dataset tells a story, reality tells another. Or picture the team that harvests job postings to predict new product lines. Titles spike for on-device inference, but the company ends up retooling an internal platform rather than shipping a flagship feature. The pattern was real. The conclusion was wrong. Alt data is a translation exercise, and mistranslations can be expensive. Consider also the surfaces that fight back. Platforms throttle scrapers. App stores change ranking algorithms. Browsers block third-party cookies. Device makers lock down location permissions. Satellite operators improve revisit rates, while regulators litigate over where borders end and privacy begins. The chessboard keeps changing. The edge is never a product you buy once. It is a relationship between imagination, method, and constraint. When the ground shifts, the method must move with it. Beyond profit, the ethical dimension isn't a sermon, it's a strategy. Trust is a resource. Burn it recklessly and the landscape becomes hostile. Laws harden, sources dry up, courts sharpen teeth. Steward it and the ecosystem remains usable. The best players learn to price privacy risk like credit risk, to insist on provenance like title insurance, to discuss methodology the way pilots discuss checklists. Strong opinions, loosely held and easily audited. Meanwhile, the culture around data matures. Engineers who once chased any scrapable endpoint now ask what a model assumes about the world. Analysts who once fell in love with correlations now rehearse the failure modes: survivorship bias, look-ahead bias, regime changes, domain shift. Compliance officers walk the halls not as hall monitors but as early warning systems. And leadership learns to treat alt data like a lab. Hypothesis, measurement, replication, peer review. It's slower than the cowboy era, but it lasts longer. Underneath the technical gloss sits a simple sociology. Alternative data thrives because official numbers arrive late and are argued over by people with incentives. It thrives because companies telegraph strategy through labor markets before they telegraph it to investors. Because prices online move faster than economists can survey them. Because satellites erase borders and algorithms erase delays. The edge isn't that these facts exist. The edge is the discipline to separate signal from theater and to act with conviction before the crowd learns the script. There is a quiet irony to all of this. The more the world is measured, the more valuable unmeasured things become. A private conversation, a human source, a factory visit that yields a smell no sensor can parse. The mosaic never lost its power. It just gained more tiles. Data doesn't replace judgment. It arms it. And judgment, in the end, is the only edge that survives every technological shift. One last truth is worth holding close. Edges move, principles shouldn't. Respect for law, for consent, for context. Those are not just ethical stances. They are compounding assets. An organization that builds around them sacrifices a few trades and gains a future. The history of markets is clear about systems that maximize everything in the short term. They burn bright, they attract moths, and they end in smoke. The official numbers still matter. Financial statements, audited and footnoted, inflation prints, carefully constructed, employment reports, flawed but steady. But the market trades the difference between what those numbers say and what all the other signals whisper. The satellite pixel, the price tick, the quiet trail of human motion, none of these settle the question alone. Together they give a head start. The question then is not whether alternative data will rule the market. It already does, because it rules the calendar. A useful discipline emerges from that reality. When confronted with a shiny new dataset, ask first what the world would look like if it were removed. If removing it would leave the thesis intact, the data is color, not structure. If removing it collapses the argument, then the argument lives and dies by a camera angle or a scraping method. Proceed accordingly. Ask next who else has it. If everyone can buy it, the edge is in the methodology, or it isn't anywhere. Then ask the question that matters most. What would this look like if it were wrong? Imagine the failure case in detail. A plan that cannot imagine its own failure is not a plan. It's hope wearing numbers. Edges won't stop migrating. Satellites will sharpen. Courts will clarify and complicate. Brokers will rename themselves. Platforms will open and close like gills. Somewhere, someone will discover that smelter heat signatures tell a story the market hasn't priced. Somewhere else, someone will learn the hard way that a dataset that used to predict churn now predicts nothing but policy changes. That is the nature of games played at the boundary of knowledge. The unsettling answer to the opening question is simple. The best players hunt unofficial numbers because official numbers are negotiations between institutions. The unofficial ones are negotiations with reality. Reality doesn't always tell the truth, but it rarely lies on purpose. Those who listen carefully act earlier. Those who act earlier set the price the rest must pay. So the next time a proud voice declares that it follows the fundamentals, remember to ask which ones. The ones reported or the ones revealed? In an age where the truth arrives late and the market trades early, the earliest truth is often a pixel, a scrape, a pattern in the dust of daily life. Whether that truth becomes insight or intrusion depends on the hands that hold it. And in the space between those hands and the world they measure lies the only thing that has ever minted lasting alpha. Judgment sharpened by history, guided by principle, and humble enough to know when to stop counting and step back into the light.